Hello traders, I am Sachit, and in this video I am gonna explain my personal trading strategy, my personal trading setup, which has an accuracy of 70%. It is very much simple, very much clear, and I am not telling this randomly. As you can see, this is my trading journal in which I have been journaling my each and every trade from past 6 months, and there are hundreds of trades here which I have taken only using this one strategy. And by analyzing my journal, I can clearly tell that my accuracy in this setup is almost 70%, which means out of 100 trades, 70 trades are going to hit my targets and only 30 trades are going to hit my stop loss. So this is my win percentage in this strategy. So it's a very much basic strategy. I'm gonna use two simple concepts here. First one is support and resistance. Second one is resistance. I'm gonna combine these two things and make a trading setup now. Let me just draw two levels here. This is one level and this is my another level. So this level, let's name it as resistance, and this is a support. So if you look at any book or any core videos about trading, it's always mentioned that whenever market comes near a support, we have to look for buy opportunities. Whenever market is near resistance, should always look for sell opportunities. So it's basically buy on support, sell on resistance. This is the core, this is the foundation of trading. We have to follow this. Now, this is our first concept. The second concept is liquidity. Basically, what is liquidity? Liquidity is a point where the buyers and sellers are activating at the same point. Now, this is a resistance, this is a support. Market is moving from here, up and down, up and down, up and down. But there is no liquidity here, there is no volume here. Because here in the support, the buyers are getting activated. In the resistance, the sellers are getting activated. They both are not getting activated at the same time. So now whenever there is a breakout in the market, what happens? The sellers who have made the sell positions here are exiting their trades just because they think that it's a breakout, market is going to give an upside movement, so because of which they exit their trades. And at the same point, the buyers are placing their buy orders here thinking that it's a breakout, market is going to give an upside movement, so they place their buy positions here. So at this time, in this area, both the buyers and sellers are getting activated and there is more volume here. So this is called as liquidity. So now we will combine these two concepts and make a trade. Now we are gonna combine these two concepts and form a setup. Let me show you how. Now market is moving in a range now from support to resistance, and now here there is a breakout. As soon as there is a breakout here, the sellers are sold here, they are exiting their position. That means there are no more sellers in the market, and during this breakout new buyers are entering the market and the stop losses are here. It's a basic common sense in the market that market goes in that direction where there is more amount of stop losses present. Now there is no stop losses present here because the sellers have exited. The stop losses are present below this level. That means the market mostly it's gonna reverse and give a downside movement. From here, what are we going to do? Market has entered a liquidity area. When it starts to reverse, we'll get back to our foundation, that is sell on resistance. We are not buying here. We are going to sell on the resistance. We'll take our entry here. Stop loss will be above this level and our target will be the next support in the market, that is this. Now most probably as the buyers are trapped here, there is no sellers present in the market. So now the buy stops are here, the stop losses of the buyers are here. The market will obviously go and hit our target if we sell on the resistance. This is how you can form your trade using these two simple concepts, support and resistance and liquidity. Same goes for the opposite side. Now market is again moving here, support to resistance. Now it has given a breakdown here. The first reaction of retailers will be the buyers will exit their trade thinking that it's a breakdown, and there will be no more buyers here, because of which the stop losses from here have been vanished. There is no stop losses here. The new sellers will enter here thinking that it's a breakdown and market will give a downside movement. When the sellers enter, the stop losses will be present above this level. So again, common sense, wherever there is more stop losses, market will go in that direction. Now what will we do? As soon as the trade will reverse and it will come to this level, we'll go for a buy side trade from here, target here, and our stop loss below this level, and we are following our foundation, that is buy on support. We are going for a buy side trade from the support. We have grabbed the liquidity of the fresh sellers, the stop losses are present here, and most probably market will go and hit our target. So this is the basic, this is the core of trading, and it is a very much simple strategy, and 70% of the time if you just backtest this, the same thing is going to happen. This is just a outer structure of my strategy. There are some rules which we have to follow in order to plan a perfect entry, to plan a perfect trade. So these are the few rules which we'll be following while we enter the trade. We will not enter the trade until and unless these conditions will be satisfied. So the first one will be draw support and resistance in 5-minute time frame, then refine it in 3-minute and 1-minute time frame. So as we are scalping, we'll use the 5-minute time frame to draw the perfect support and resistance, and we'll just move to the lower time frame just to refine those levels. So the second rule is, whenever the support or resistance is broken, shift to the 1-minute time frame and wait for at least 2 to 4 candles to close above that level, which means this is the level, breakout is done. We have to let the market sustain above this level so that it gives more opportunity and more time for the new buyers or sellers to enter the market, because how many buyers and sellers will be present, the more number of stop losses will be present below that level, because of which market can give a quick movement. So you have to always wait for 2 to 4 candles to close above that level. And the third one is, while entry, always draw a confirmation trend line for perfect entry. I'll just show you an example. While showing the example, I'll show how to draw a confirmation level for the perfect entry. Then the fourth rule is, stop loss should be around 10 to 15 pips. Our stop loss, this is our first priority, to keep our stop losses small. So this is our next rule. Trade mostly during 11 AM to 1:30 PM London session. So what happens is, 11 AM to 1:30 PM, it's a timing where the Tokyo session and the London session both overlaps each other, because of which the two sessions are open at the same time. There is double volume in the market, and there are high probabilities that we'll get good rally here during this time. And this is the another session, which is New York session. 5:30 to 8:30 PM will be the timing. During this session, the London session and the New York session, these markets are the most important markets. So these two markets overlap each other during this time. So this will be the best timing, New York session, for more volatility, more volume in the market, and we can see big moves in the market mostly around this time, and this is Indian Standard Time. So these are the 5 rules which we have to follow in order to capture a profitable trade. So let me give you an example now. So if we see here, now I'm using a 5-minute time frame. I'm going to draw a resistance level from here. This is a resistance level. As you can see, market has taken resistance from here. After drawing it on 5-minute time frame, I'm shifting to the 1-minute time frame now, and I'm gonna refine it now. As you can see, I have refined my level, and now the level is very much thin. After refining, what am I going to do? I have to wait for the market to give a breakout and wait at least 2 to 4 candle to sustain above this level. The breakout has been done here, and the market is sustaining about this level. After sustaining, we have to shift to the 1-minute time frame When it is reversing, we have to draw confirmation level for entry. The confirmation level here will be a trend line. So if we join these 2 points, this one point and this is another point, if we join these 2 points, which is basically acting as a support level here, you see market is giving upside movement from here. As soon as this trend line will be crossing, we'll come back to our core, our foundation, that is sell on resistance. We are selling on resistance. This will be our entry. Stop loss will be above this level, almost around 10 pips. And the target will be next support in the market, which is this level. This is our support. So as you can see, we have captured almost 100 pips. We have captured almost 100 pips in this trade, and this is how I have combined the core, the foundation, the support and resistance, and the concept of liquidity. What did I do? I have just taken a sell side entry in the resistance, and I've waited for market to create a liquidity to give a breakout, so that the sellers who have entered here, they are getting exited from the market. New buyers have been entered in the market. The stop losses are present here. The market is going in that direction where most amount of stop losses are present. And if you carefully observe, just see the volume which automatically pops inside the market. If you see here, so much weak buying, there is no volume here. As soon as there is a liquidity grab, just see the volume in the market. So huge selling candles. So this is what happens when you just combine the foundation and liquidity. You get to capture huge trades. And the importance of small stop losses. Now as we are trading liquidity grab, market has to go in our direction. If it's reversing, our analysis is wrong. So why do you want to keep your stop loss big? We have to keep our stop loss almost small, so that we can manage our risk to reward ratio. As you can see now, the risk to reward ratio is almost 1:11. If I make my stop loss big, if I keep my stop loss around 30 pips, the risk to reward is 1:3. So always keep your stop loss as small, so that even if your analysis is wrong, you close your trade in a very much small loss, and you can easily recover it in the next trade. So this was a strategy in which we used the basics and liquidity to form a trade. If you felt that this video was informative, if you felt that this video has given some value in your trading, do like this video, subscribe to my channel. That's it for this video. See you in another amazing video.